Hello and welcome to Wyckoff Training Academy. It's been a long time I have uploaded any video regarding mm, one second. Let me pull up my chart. Just give me a minute. So now what you're seeing is 208, 206 version applied on the chart. So to begin with, this is the first day of training. So this training is applicable to all the students who have opted for my accumulation distribution course, who have opted for um, Wyckoff in 21st century course, who has opted for single indicators also. So they can take benefit out of this course and understand how I plan the trades. So, like for example, I'll take first market we would look into FCPO. Okay, so just for sake of discussion, I'm placing the market. So how I normally trade? What is the intention behind creating all these indicators, and what is the purpose of creating this indicator? The sole purpose of creating this indicator is to give you or a trader should get trading areas wherein we could initiate trades. So what is my trade setup? I always rely on my two trade setups, which are simpler and which can be adapted and which can be applied within a day or two. It doesn't require you a practice of like 6 months, 7 months, 8 months, or one year. Though there are different trade setup as well, but they require lot of patience and lot of practice, which nowadays traders lack. So this trade setup is something which is continuation pattern kind of a trade setup, wherein this is this is a zone or this is a price level, this is a liquidity level, or this could be an accumulation level. Anything. Price goes up, makes a swing high, comes back and makes a swing low, and at this particular point, the pullback price, we would plan for a buy opportunity over here and we would look for a upward movement. This is one kind of trade setup. Second one is this one is of for buy. This one is for sell. Price is coming down. Either this could be a key zone, either this could be a liquidity level, either this could be a accumulation distribution setup. Price will come down. Test it. I prefer one or two candles to be there, and then after that I sell short sell at this particular level, and this is my stop, and I look for respective targets. Same goes here. I look for respective targets. This is the simple trade setup which I would be discussing more on. So please pay attention into it. So we'll try to find out this setup, and we would like to we would decipher how to use this thing. So first, we are going to see liquidity areas. So what is liquidity area or liquidity hunt? Liquidity hunt is a price level wherein there is main interest of smart money, wherein they keep on rotating, revolving price in and around, and based on that, it gives us an indication that this has a longer price level, as well as there is price is in indecision and it is revolving around it because the result is not clear. Like for example, here in on a 5 minutes, this is 24th crude palm oil. This is for my Malaysian student who is trading crude palm oil. So I'll hide. We don't need zones now as for this lines. So this was the liquidity line area. This is the price, liquidity price, and market came back. Every time it came near to this line, it bounced back. It went up in the upward direction. What does that mean? That means they this was on a testing taking place on a higher level of this particular price level. So every time the price come here, smart money is buying back. Every time price is coming here, smart money is buying back. Every time is price coming here, smart money is buying back. And you can see swelling of volume would take place at this particular point. Swelling of volume taking place at this particular point and in this particular point. So now how to trade this thing? I only trade on first pullback. In any of my strategy, I only trade either first pullback for any buy trade or any first pullback for any short sell trade. It is as simple as that. After that, if there are pullbacks, I will see whether I don't trade the second, third, or fourth pullback. I always look for trading first pullback opportunities. Or either, as this Malaysian student has opted for my premium course, so I'll teach him how to identify strengths and everything. So that would be covered tomorrow in a private session. So as I'm addressing that student during this interaction, though this is a general public video for everyone. So having said that, there are other ways also. But preferred way, pullback and then trade. We haven't got a pullback, no trade was there. This entire 28, 27 was no trade day as per liquidity hand. So this is one type of trade setup. Now we'll dive into second trade. Like we'll see whether we got trade setup from 24th onwards. So we haven't got any trade setup in liquidity hand. So now switch to trade setup one. That happens to be liquidity or that happens to be one. So what is the purpose of key volume zone? Now, if like he mentioned 2 minutes. I don't know how much long he can hold, how much long he can because this is a future contract, so this can be held for entire month. It is not like that once you bought, you have to close the trade within a day or two because this is a futures market, I guess, because it is written crude oil, crude palm oil futures. So breakout, test, and then I would look for opportunity. So now, what is key zone? Key zone. It is mentioned over here, my friends. Trade setup one, price volume key zone. Long for long or short opportunity, look for first pullback, long stop, short stop loss, long stop loss. It is mentioned over here. It is self-explanatory. Let's see what it has to offer. This is a zone which was formed on in between 24 to 27. That might be 26th or 27, 25th might be possible. I don't remember the days. So I'll consider this to be somewhere after 24. So we got a price level. Now we are getting two lines, this upper line and a bottom line. What does this has to offer? Whenever we get a price key zone formed, it automatically plots market levels towards its upper side and downward side. That means market top levels and market bottom levels for this particular price action. So if price is revolving within this region, that means between your market top and market bottom lines, that means it is in consolidation. It is not, the direction is not clear. So now the question would arise, this is a market on 2 minutes. And if this is a bigger zone, then how to trade? But you can see to the left, this is a smaller zone. So zones may differ because they are calculated based on Wyckoff teaching of price and volume correlation and how demand and supply is assessed on single particular price level. Till now, what you people are doing is you're trading based on rally, base rally, drop, base, drop, SMC, ICT concepts, Wyckoff schematics and all the stuff, which is completely uh, uh, old school kind of a thing, and which is not delivering up to the level. So for that, now this is the future, my friends. Try it and understand. Once you understood the potential of this, you would not leave this thing, and this has greater potential to give you. So for example, FCPO on after 24th, we got a level formed, we got a market bottom, a market top. Look how market top is getting respected. Why this market top is getting respected? Anything above this one would be a bullish market. Anything below this one, market bottom would be bearish market. Remember this thing. Anything above market top would be a bullish market. Anything below market top bottom would be a bearish market. And anything which is within this key zone is something wherein there is indecision and consolidation taking place. So we'll look into other example as well to substantiate us my say. We now comes the question how to trade this thing. I trade either this kind of opportunity. If not, I trade this kind of opportunity. I buy here on the first pullback. This is always remember I always trade on first pullback. This is my first pullback. This is my target and it is achieved. So I don't know how this gentleman is trading with what lot size, what account size. I don't know even how much money one makes when uh, is it based on the lot size or different things. All in all, give or take a particular trade. And after that, market revolved around it and it came back again. So now this was the second pullback. Then price went upward. This was the third pullback. Then some degree of upward movement. Then fourth. Then price is hugging and revolving here. Then the fifth one, but price haven't touched back. Came back and tested this level. So I always trade first pullback. So in liquidity hunt, we haven't got any trade, but in key zone, we got a trade at this particular point, which yield 1 is to 5 risk to reward ratio. My risk was against my risk, I got 1 is to 5, which is, I guess, more good for any market. I don't know how many, like, what lot size they trade with and this thing. Now just look into do what other what like I mentioned, I'm starting from inception. So now one question arises if there is a level which is formed and which is continuing for days and days. Like for example, this particular level formed in somewhere around 20 and it lasted till 24. So whatever the price rejection upwards or downwards should be considered because the first pullback happened over here. So then we should consider this one or not. So for this, if there is a gap down, gap up, and if there is a new day, you can try to look for this kind of opportunity. But the problem with this one is that this thing is purely meant for XAUUSD and GBP USD and Euro USD. So for person who is trading crude palm oil, I would recommend him or I'll suggest him don't trade based on price volume key zone. So now what he is left with, can Wyckoff accumulation and distribution has something to offer him? Let us see. Now, what is Wyckoff accumulation and distribution? It is very simple Wyckoff accumulation and distribution. Whenever there is a green line, that means it is either an accumulation, act of accumulation, or it would get converted into redistribution. Or either ways, this would act as a jump across the creek. I'll repeat again. If there is a green line, that is accumulation, that means it would be an accumulation, or either it is a redistribution taking place at the top, and after that redistribution, this particular line or price level can be considered as a jump across the creek. Remember this ring. So now, do we get trade based on this one? Let us see and watch. You are trading a 2 minute market. This is an accumulation. We were expecting this could turn out to be a accumulation, a redistribution, or a jump across the creek. But what happened? Price went down. It tested this level and sinked in. So by definition, what is jump across the creek and what is FTI, fall through the ice? These are the analogies of later on added into Wyckoff. Following, falling, falling through the ice. Falling through the ice means it happens after a distribution phase. Jump across the creek means it happens after accumulation. So in this particular case, what is this actually happening? It is either jump across the creek or fall through the ice. It is fall through the ice. So why I'm going into jump across the creek and fall through the ice? The entire schematic understanding of a schematic is just left or just to identify whether prices are going to go upwards or prices are going to go downwards. If it is going downwards, that means is distribution. If it is going upward, then this means accumulation. And what is the most desired area of purchasing or area to enter into any given trade? Which is the desired area? That area is jump across the creek and fall through the ice. Nobody talks about it, but few people speak about this one, but nobody explain it. So what we are doing here, what I have coded the accumulation and distribution minor level, which offer to us as jump across the creek or fall through the ice, or either they would act as a accumulation or either reaccumulation, distribution, or redistribution. So now you would say, what is jump across the creek and FTI and how these four things? Listen very carefully. This is a very important lecture, especially for the person who opted for this Malaysian guy. So when this is an accumulation, if price is coming back and testing it, that means this is an accumulation zone. If this is not if for example, if this is not a this is accumulation, price is going back and are coming to this level, or for example, this is a distribution per se. Fuchsia color line means accumulation. So I will add ACC and DIS so that nobody gets confused. So this is accumulation. In accumulation, what we see, price to go upwards. Price should go upwards. So many a times it has been seen when this kind of thing is formed, price rallies up. So many people just there are two ways. Either if once this thing is formed, you can initiate your buy trade with a stop over here and wait for price run. But this is an aggressive trade, which I don't like to. I like to see the trade when the price goes up and come back to this particular level. And once it tests it, and my vice wave is giving me low selling of supply volume, then I would blindly go for a buy with a stop beneath because here I have little to lose but more to gain. This is my first style of trading. Second style of trading is if price is going down and then coming back and testing it. This now is getting converted into FTI, fall through the ice, break down and test, and then prices sinking in. So this one line is giving me two multiple opportunities. It is giving me a buying opportunity, a straightaway buy opportunity, a pullback buying opportunity, a breakdown and a pullback selling opportunity. So it is one line is giving me 3 to 4 trading opportunities. When it comes to distribution either when the distribution occurs, you should or one can go for a trade over here. But I don't recommend it. I wait for a pullback, then I short over here, and then if my vice wave is giving me a low demand kind of signal, and my 150 hour version is also showing me there is lack of demand, then I will short sell over here with the stop with little to lose, but more to gain. So to this gentleman who is doing FCPO on a 2 minute, 3 minute, or a 5 minute, look for this kind of trading opportunity. Like this is accumulation. You can see price. What I mentioned, this is a swing point. What is a swing? Here it is a low, then we got a high, then we get a low. This low could be lower than this low, or this low could be just equal lows. So we got one, two, and this three levels. So this makes first pivot, second pivot, and third pivot. So this we require three pivot points to assess whether it is a swing or not. So here we have first pivot, second pivot, third pivot. So this is an official pullback. So you can initiate trade. Now for pullback, many a gentleman had a problem whether we should consider like for as per my explanation, I only consider one or two candle, but sometimes there are many candles taking place into one particular level. So now on those lines, what to do? I always straight away I skip that trade because I made my rule. I will only consider one or two. So based on that, accordingly, you can make your own rule. Whether you're okay with 3 to 4 or 5, 6 candles going below and then price coming up, and then you'll consider it as a pullback. It is up to you. You can make the rule. You can make the rule. It is up to you. So you have to decide. So for this gentleman, I have 2 minutes. Just give me, just give me the pullbacks rate setup, which I which I have which I have explained to you in this particular session. Minutes. They will give you to all my traders who have taken my indicators or who are about to take my indicators by watching this video. We don't trade to make money for the brokers, neither the exchange. We make trade to earn money for our own self. So what does I mean by that? Is like I cherry pick the trade. Sit for 5 days in a week. Even if I get 2 days in trade setup, more than enough. If I get one day sitting for 5 days and getting one trading day as a trade setup, I'm very much content because I know my trade setups and I know when the frequency is less, then quantity has to be increased. So that is something money management. Once you all graduate from this level, then I'll speak on that one. So this has offered a selling opportunity at this particular point. This has offered a buying opportunity. This has offered a buying opportunity. No, no, not this one, but this one has an offered buying opportunity. Then again, no, this one has offered a selling opportunity at this particular point. So you can make consistent income, but it depends upon how you plan to do it. About accumulation and distribution. Now I'll talk about these are the lines which are only depicting dynamic trend directions. If it is red, the trend is down. If it is green, the trend is up. Simple. So when the trend is down, and if I get a sell, if I get an accumulation, or if I get a accumulation kind of a thing, and price breaks this thing, and goes downwards, then it has a higher probability that it would go downwards. But again, it depends upon where it is coming, where it is appearing. So that has to be taken. There are two kind of trade setups. One is with the trend, and another one is counter trend. So in my next lecture, or next session, I would be discussing more into that one, continuation trade and counter trend trade. So I hope people might have enjoyed this video. And thanks a lot. Thank you for watching the video.